Hello, everybody. This is Noah and John, and we are with Urban Digs. And today we are talking Manhattan. And John, we got a good one today. We got an industry veteran producer, Julia Boland. She's with Corcoran for over 10 years now, but I think she got over 24 years experience in this market. Proud resident of near Mount Morris Park in Harlem. We're definitely going to be talking about Harlem a little bit today and Northern Manhattan. And we got her all to ourselves, Johnny, for the next 15 to 20 minutes. Julia, we're about to ask you a couple of questions. Are you ready? I hope you are. Not even going to let you answer that because here's the first question, please. What is going on in the state of the Manhattan real estate market today?
Well, let me start by saying, Noah, John, thank you for having me on your show. I've been following the show since you started, and so it's a real honor to share my insights. So, the state of the market is very interesting. It's a mixed story. You know, the Corcoran report came out for the fourth quarter showing that signed contracts were up 22%, sort of representing what they called roaring back. And while that's true, it really hasn't roared back for everyone. There's a lot going on. I find that the people who are owning properties or trying to buy properties below $3 million are facing two hurdles. One, we're all painfully aware of, is the increased mortgage rates. But the second is the lock-in effect, which is really restricting inventory. And yet, when you go to the luxury market, sort of, I want to say $4 or $5 million or above, depending on which report you're following, that market has been incredibly vibrant, and that's where we're seeing most of the deals done. And that's because those buyers are less dependent on mortgages. Many are cash, many are finding other vehicles for financing their purchase. And that's where the bulk of the deals are being done.
Interesting. So, Julie, let me ask, because Northern Manhattan, sometimes it's a bit of a transition zone between luxury real estate and some of the more financing dependent. And I'm curious how you see that swirling around, especially in some of the more prime areas like Mount Morris Park and in some of these areas.
Well, this is a really interesting question, John. So I define Northern Manhattan above 96th Street, which I think most people do. And again, we're still seeing this mixed story. So I'm the independent consultant on Claremont Hall, which means, I'm the neighborhood expert, and I'm not there that many hours a week, typically anywhere from 2 to 6. That is the one of the very best performing new developments in the entire Corcoran Sunshine portfolio. It's really been on fire, and I can attest to that. People are just so excited about the project. The Robert A. M. Stern Design Building is right there in the heart of Columbia University, overlooking the river. It's just spectacular. But meanwhile, there's a lot of properties in newer buildings. When I say newer, I mean less than 15 years old, still have tax abatements in beautiful shape. Those properties are struggling. So, for example, I have a 3-bedroom at 1485 Fifth Avenue. Absolutely beautiful apartment, views like you can't believe, which are protected views because you're overlooking a landmark park. We have lowered the price significantly from what the owner paid a few years ago, and we're really having trouble. So I'm expecting that to shift in the coming months as people get more comfortable with the new environment of mortgage rates and realize that their landlords are going to pass all those costs on to them. They're better off building equity than they are building equity for the landlord.
I just want to follow up because I think you brought up two great points. You mentioned Claremont Hall. It's a lovely building, and honestly, some of the views from those apartments up high are just amazing because it's as you said, it's right there situated. I think it's in the heart of the Union Theological Seminary. It looks down at Columbia. I mean, it's spectacular, and I can understand that location has a draw. And I can understand you mentioned 1485 Fifth. I think it was. I think that's got a draw too. It's right on the park. And I'm just curious, when you look at some of these Northern Manhattan areas that have been sort of overlooked for a while, in your opinion, is it only a matter of time before you start to see more new development sprout up in these areas that have been somewhat overlooked?
Excellent topic. Thank you, John, for bringing that up. I couldn't have asked you to tee up that question better. So, part of what drove the excitement over Central Harlem over the past 20 years has been new buildings. And why the developers were able to afford to build the new buildings was a 421A tax abatement, which, as you well know, we haven't had for years. Something similar was brought back by Albany about a year ago, but that only pertains to rental buildings. And I would argue that Northern Manhattan desperately needs more condominium buildings to offset the affordability crisis. Now, nobody's boo-hooing in Albany for somebody who's got, $2 million to spend and feeling like that's not affordable. But in New York City, that's a reality. And if you want to stay in the city and you need 3 bedrooms, it's really hard to find something. So I guess that's a long way of saying, yes, I do think buyers are coming back to Central Harlem. I do think they're going to be back in the coming months, but it's been a 2-year stretch. Another part of what's holding that market back is the lock-in effect. If you look at the sales in most of the buildings, they've been built since 2012, 13, 14. There were really low mortgage rates. Even people who bought in the past, say, 5 years, they're locked in. And unless there's a life event that says, oh, we need to sell, we need more room, we're moving, whatever, we're downsizing, they're staying put. And I know because I'm one of them.
This is really interesting. Julia, I want to stay on Northern Manhattan. Just one more question here before I move on. In your opinion, the pipeline of development, the future supply of condos that are slated to come on. I'm not talking about what's not filed yet. I'm talking about done filings and it's actually going to be starting building soon. How would you describe that pipeline? Is it good? Is it high? Is it low? Is it very low?
It's low, but it's low across the city, Noah.
Yeah.
You know that. I mean, in the fourth quarter report, new listings and new developments for the fourth quarter were down 74% in Manhattan.
Yeah. And I think that, we talked about this during the pandemic. We talked about a potential crunch in inventory. We talked about this 5 years ago, and here we are, like 5 years
We
later. It's so
are
crazy.
here.
I know. And I don't see it changing over the next year or two. It's like we're going to be dealing with this tight inventory for a couple of years, it looks like.
We are, and we need that tax abatement to make Northern Manhattan viable again for developers to build. Because right now, some of the most active builders in the neighborhood who've built wonderful buildings, they're building elsewhere.
Yeah,
They're
it's
building in
true. You got to
Philadelphia, New
reallocate.
Jersey.
You got to pull
Yeah.
that allocation there to here, right? Hey, you got to
Yeah.
do what you got to do to get the activity. Go, John.
Well, I was going to say there's also an interesting dichotomy because you talked about the Claremont Hall, which is, I mean, that's a luxury building from bottom to top. It's a high rise. It's got plenty of amenities. But if you look at some of the new constructions that are happening in some of the far-flung areas of Brooklyn, they're much lower to the ground. You're looking at 4, 5, 6 stories. Sometimes there's no elevator. And they're nice. They're beautiful places. They're condos, but they sort of, you take a couple of old townhomes, talk them down, you build up a new condo. And people are really responding well to that. And I'm wondering if that might be some of the future for some of these more central areas in Northern Manhattan, which have, plenty of, aging townhomes and maybe developers come in. But it seems like, to your point, Julia, it seems like I do agree that it is a matter of time before that sort of wave of development comes because we are short of supply there.
It sounds to me, John, like you're referencing the city of Yes, which just passed.
Yes. I was gonna talk about
We'll talk about
setbacks
that
and all that
soon.
stuff, but I was gonna try to work that in later.
Yeah. Julia, I'm going to go move on now. Thank you so much for giving us that in-depth look of Northern Manhattan. You're working with a lot of luxury buyers. I believe you mentioned that.
Yes.
And I would love to talk in your view and your exposure to luxury buyers and non-luxury buyers. Is there a mentality difference between those two sets of buyers?
Yes, obviously the luxury buyer has more financial resources to deploy, giving them more options. But over time, John, interestingly enough, what I have found is that the luxury buyer is just financially better informed.
Hmm.
So when I look at trends, I frequently see that what happens in the luxury market will happen later for the under 4 million crowd. And so I'm expecting demand to surge this year for the under 4 million. Now, when we look at the luxury buyer having this knowledge, in-depth knowledge, they know that prices have come down for 8 consecutive quarters in Manhattan. Pricing is very good. Is it cheap? Is it inexpensive? No, but when you're looking at a 10-year report, now Corcoran always puts out these 10-year reports we're looking at, the prices are very similar to what we saw a decade ago. So now is the time to buy. The problem if you're buying in the luxury market is there's a real, now because there's been so much demand and so many deals done and so little new development coming online, there's a real dearth of product. Inventory is down substantially. So many of these buyers with a significant amount of cash to deploy are having trouble finding the right home. And they're not looking for something to buy and flip. They're looking for like, where am I living for the next 7 to 10 years? Let me lock this in. And that's been a challenging market in the past, I would say 3 to 4 weeks.
Yeah, it's interesting you said that. That's one of the things we've heard about. And I get tons of emails from brokers, and a lot of them are, the in search of emails. And we're starting to see a lot of, and it's been it's been probably at least a year or so, a lot of emails about people, brokers trying to find really lovely rentals for their luxury buyers who are frustrated in finding anything. And I'm wondering if you're seeing that too. I mean, crazy rental prices too, like, $15,000, $20,000 a month because they can't find anything to buy.
Would you believe 50,000 a month?
I would believe it. I mean,
it's really,
unfortunately, that's not my price point, but yeah, I definitely believe it.
I'm working with buyers now who have identified a potential property and the owner wants to sell. I feel like 5 years in from the pandemic, people know where they want to be. There's no more question marks. So we're seeing real definitive moves. The owner of this particular apartment has had an offer to rent it for 50,000, but just has chosen to say no. I've moved on. I'm on a different continent. Like, this just makes sense for me, even with that crazy number.
Wow. So now just to bring it back to the sales market, what are there opportunities out there right now? Maybe the townhouse, the condo market?
Well, I have seen so much activity. When I say activity, I've had so many conversations this week from townhouse owners. I'm talking to 5 separate townhouse owners who have owned their property on average 15, 20 years. So the townhouses are a long-term hold and they're ready to sell. So there's going to be a tremendous amount of opportunity in the townhouse market. You know well that townhouses only represent 1% of the overall housing stock in Manhattan. Is a very particular buyer, but I'm expecting to see a real pop in the spring market around that activity.
And are you seeing any increase from developers looking to sort of purchase these, especially, we talked about City of Yes briefly, but, the idea that setbacks are being reduced, you can build a little bit more with FAR. Is that starting to perk up a little bit in the interest level, or are you still looking at end use buyers?
I'm having conversations with end use buyers. It doesn't mean that what you're referencing isn't happening. I just haven't seen it in my market. But remember, I'm a Northern Manhattan townhouse specialist. So that's really where I'm looking. And if you're a developer and you're trying to max out, your profits, you're probably going to be looking along, First and Second Avenue with those low rises, and you can get higher prices.
Interesting. Julia, this has been great. Excellent view into a specialized sector. Thank you so much. And I want to ask you one final question before I let you go today. We like to ask all of our guests on this show if they could go back in time and revisit your younger self, or if you're just talking to a new agent or a younger agent, or even an agent that's experienced but looking to just get their business to the next level. Is there any advice or tips or strategies that you would pass on?
Yes, absolutely. One of the things I've learned is that you really need to specialize. As you've witnessed by this conversation, having that in-depth knowledge really allows you to connect with the buyers and sellers. That's what they need. And yes, they need your online presence. Anyone who's followed my blog or followed my YouTube channel or my Instagram, they know that I put a lot of content out. But when it comes down to your buyers and sellers, they need your deep knowledge. So find an area that resonates with you, not only a geographical area, maybe an area of real estate. Like, it's a very vast. What are you personally interested in? Focus on that, become the specialist, but most of all, do not expect overnight results. I'll give you a great example. An agent I work with at Corcoran, he does all these videos, and he started about 2 years ago where he would just start videotaping random apartments, and he kept posting and posting and posting and posting. Now that's his lead generation source, but it took him 2 years to get a steady stream of business. So this idea that it happens instantly, isn't realistic. And I would point to the latest show on Netflix, this broker at Element, who's the success, she admits that it took her 10 years of doing nothing but working like a dog to get where she is. So I think if people come in and they think that they don't have to work hard and it just happens, they're going to be sorely disappointed.
Yeah, right. It never just comes right to you. You have to work your butt off. And I'm so glad you said that because I think a lot of agents they're looking for instant gratification, especially when in some of their investments, right? Like building mailings, farmings,
Oh,
events that
yeah,
they hold.
yeah. It takes
Um,
forever.
yeah, it takes time. You can't just do one and just be like, all right, let me get the deals coming in from that one. Oh, nothing came in. Let me stop doing that. No, this is a long game. So thank you for mentioning that. John, you have any
Mhm.
final questions for Julia?
Oh, I've got a couple if you got time. One of the
Sure,
things I
John.
wanted, because you mentioned you put out a lot of content, and I think that's fantastic because it's really difficult for people to sort of get into that rhythm. But I want to focus on one thing, which is, when you host an open house, how do you break the ice? How do you talk to people? What kind of conversations are you having at open houses these days? And I'm just curious what buyers and sellers, or more importantly, buyers are interested in talking about.
John, I think that's a big part of my success is that I don't have a script in my head. I just spend a lot of time listening intently. I'll ask some open-ended questions, but then I want to know what is this particular buyer's priority, and then I address it.
I
A
love
lot
it.
of my content will come from the conversations I have on a daily basis, whether it be at an open house or just somebody calling me about the market. And a big reason I have so much content is I was always able to get in front of a lot of people in an open house back in 2019 and before. And when COVID happened and few people showed up or I couldn't reach them all, is when I started my YouTube channel.
Hmm.
So that's how I
Awesome.
started sharing my insights.
Well, so
Listen intently. Love it.
I know Noah's trying to wrap it up because we don't want to go too long, but I do
No,
want
I'm
to
not.
follow it up.
John, you can call me
Totally
anytime if
are.
you want to pick my
I,
brain. It's
but
okay.
I'm just going to follow up because I think it's an interesting, the virtual open houses really took off during COVID. I mean, you were physically prevented from going to an actual unit. So there were a lot of these virtual open houses. And I'm wondering, is there any blowback on the business itself? Like that just putting out a virtual open house and not making that person to person contact? How does that impact the business? And I'll leave it there.
That's fine. No, it changed substantially. The volume of people that come to an open house is down significantly. And that's because people who didn't previously use technology to the extent that they do today adjusted. And so we are now used to saying, okay, I'm going to, investigate a property online in depth through the photos, through the description, through the floor plan, through the videos. And then I'm going to decide if I'm going to see it or not. Whereas I feel like before, people would say, oh, that property checks some of the boxes. I'll go see it. Then I go back and I take a look at all the collateral. That has changed significantly. So that's why my message needs to get out long before I ever meet them. I have people hire me who I've never spoken to. They just pick up the phone and say, I want you to negotiate for me. And that's because they already watched my videos. They've already interviewed me and I didn't know it.
That's pretty cool.
Yeah.
It also means that the people who are coming to the open houses are they're already way down the funnel. They're a much more targeted buyer. They know their stuff. It's not just like, what's this got to look like?
Yes and no.
Okay.
I wouldn't make the funnel assumption, but I understand why you would draw that conclusion.
Yeah, and I was just going to say that you're clearly building yourself a brand of trust, and that trust is almost like this doing the selling for you, right? The loyalty and the selling.
I do think that a big part of my success is based on my honesty, my knowledge, and being very forthright. And people do trust that.
Yeah, those are excellent attributes for any agent that wants to build a successful business, and that
True.
takes time. So this has been great. Julia, thank you so much. Julia Boland over at Corcoran. Thank you so much for your time. That is John Walkup. I am Noah Rosenblatt. This has been Talking Manhattan, and we'll catch you next time.